Let's stay on that, talking about gold now. That increase in the price of gold catches our attention. So let's have a conversation now on that with Dr. Teva Kumeke. He's analyst with Financial Derivatives Company. Dr. Kumeke, thank you for your time. Do we know what's driving this new high for gold? I do know that, of course, global central banks are turning to gold for their reserve. Is this the major driver at this time?
Thank you so much. Good afternoon. Thank you for having me. Yes, the statistics you just read is correct. Gold price rose to about $2,400 in mid-April. So if you compare that with 5 years ago, that's about 27.15% increase in the price of gold per troy ounce. And compare that with last year, you have about 15.95% increase in the price of gold. We've noticed that these are interesting times. In a normal cyclical economy, you expect that where interest rate is high, inflation is stable, and you expect to have an inverse relationship between the price of gold and the US dollar. But due to certain factors we observe over the past 2 years, we've seen these two commodities move in the same direction. For example, the geopolitical tensions in the Middle East, Israel-Hamas war, and Iran attacking Israel. We've seen rising inflation in other countries and investors looking for safe haven. So we observe that there have been high demand for gold because investors are trying to look at where to stabilize or to shade against or to hedge their investments against uncertainties happening in the global world. So this observed movement is a way of shielding against any form of losses that may be incurred due to geopolitical tensions in the Middle East and other parts of the world.
Now that it seems we're seeing a loosening trend when it comes to monetary policy. We've seen Switzerland has cut, we've seen Canada has cut interest rates, England has held, but we see that they've hit their inflation target, so perhaps the next sitting there might be a cut also from the UK. Eurozone also had a hold stance. How does this affect this new desire and demand for gold by central banks?
Yeah, and like you said, the U.S. inflation has stabilized to 3.3%, and investors are already anticipating a rate cut in the federal rate, in the Fed rates in the U.S. This has implications. So we're going to see easing in monetary policy by most of these advanced economies. What that is going to happen is there's going to be a shift from dollar holding for reserve to more demand for gold. So lower interest rates means that investors are going to look for where there'll be higher investments. Gold itself is like a stabilizing commodity, which is not affected much by crisis. So lowering interest rates will lead to less holding for the dollar. Then countries are also looking for how to diversify their investments. So they're looking at, okay, let's have a percentage of our reserve in the US dollar and a particular percentage in the gold reserve. Then, so coupled with all the uncertainties in some of these countries, we expect more demand for gold in the next 2 years. That's our forecast.
Is this enough incentive for countries like Nigeria to, give more attention to mining gold?
Yeah, recently Nigeria announced incentive for mining gold, which is a good thing. Nigeria has joined the Global League of Nations producing gold, like China, Russia, Ghana, and other countries. But we have issues in Nigeria that we have issues of infrastructure. We have an issue of artisanal and small-scale mining and illegal mining. Yes, mining of gold can add to our reserve, but that mining is a process. Mining is different from the refined gold. Are we going to generate the required quality that will meet up with the international standards? So mining gold will be a plus to our economy, but we have to deal with the issue of infrastructure. How are we going to handle illegal? We have issues of illegal mining in so many in the mining sector. Then artisanal and small-scale miners. How do we incorporate this informal form of mining to a more formal mining industry that will add to our GDP and increase the revenue of the citizens, add to our GDP, and boost our overall economy?
All right, Dr. Teva Akumeka, questions that also affect other sectors or other production parts of Nigeria are still unanswered, and we're still looking for those answers. But thank you so much for your time.
Thank you so much for having me.